Current account deficit, Crazy Cambridge IGCSE Economics 0455. Welcome to Crazy Cambridge. Here I provide IGCSE and AS explanatory videos. IGCSE subjects include business, economics, accounting, biology, physics, math, and English. AS videos include business, economics, accounting. I also provide tips. So, balance of payments is a record of all the monetary transactions between residents of a country and the rest of the world over a given period of time. It's divided into three main accounts: the current account, capital account, and financial account. Now, we're going to look at the current account. So, this current account will record the visible trade in goods, the invisible trade in services, net income received or made in payment for the use of factors of production, also known as net primary income. So these are income debits, which are outflows, include wages paid to overseas residents, interests, profits and dividends paid to overseas residents. Then income credits inflows include wages paid to UK residents working overseas, interests, profits and dividends earned by UK residents and firms on investments they have in other countries. Income received minus income paid is equal to net income received. Net current transfers includes payment between governments for international cooperation and other transactions. It involves payments for non-productive activities like net secondary income. Net secondary income includes debits outflows, which is financial aid, donations, pension payments. Credit inflows includes financial aid, donation grants, pension statement payments received from overseas residents and foreign governments, and tax excise duties paid by overseas residents. So transfers received minus transfers paid is equal to net transfers. Now let's look at what a current account deficit is. So when the financial outflows in the current account exceed the financial inflows, the current account is in deficit. The causes include high exchange rate. If the currency is overvalued, imports will be cheaper and therefore there will be higher quantity of imports. Exports will become uncompetitive and therefore there will be a fall in the quantity of exports. Economic growth is when there is an increase in aggregate demand and national income increases. People will have more disposable income with them to consume goods. If producers cannot meet the domestic demand, consumers will have to import goods from abroad. Thus, the faster economic growth enables the possibility of a current account deficit developing. Decline in competitiveness. If export industries are in decline and cannot compete with foreign countries, the exports fall, ushering in a deficit. This is a major reason for many countries today experiencing current account deficit. Inflation. This makes exports less competitive and imports more competitive, which means it makes it cheaper. Recession in other countries. If the country's main trading partners experience negative economic growth, then they will buy less of the country's exports, which will worsen the current account. Consequences are low growth, so a deficit will lead to low aggregate demand and therefore slow growth. Unemployment, so the deficit can lead to a loss of jobs in domestic industries as the demand for exports will be low and demand for imports will be high. Low standard of living. In the long run, persistent trade deficits undermine the standard of living as demand and income fall, especially if the net incomes and transfer show negative balance. Capital outflow is the currency weakness that can lead to investors losing confidence in the economy and taking the capital away. Loss of foreign currency reserves. Countries may run short of vital foreign currency reserves as more of the foreign currency is being spent on imports, and foreign currency revenues from exports will be falling. Increased borrowing. Countries will need to borrow money or attract foreign investment in order to rectify their current account deficit. This is the end of part 1. Do stay tuned for current account surplus account. Thank you for watching Crazy Cambridge. Please do subscribe, like and share.